All right, so today, market Tuesday, pretty wild. Starting with the SPY here. So as you can see, we've got the daily chart. I mean, still bouncing perfectly off this ascending support, generally speaking. Now we did close lower than the past few days. So we closed at a new low, not below the last 2 days low of day, but whatever, it was a weekday. Although saying that, it was a bit of a wild roller coaster, so we were up and down, but the close is more important than the open or even the intraday moves. So if I just zoom in a little bit on the intraday, basically went up and down, but closed at the lows. That's for the SPY, and as usual, it's almost identical for the other markets. Nasdaq, Dow, Russell, it's perfectly identical. However, if we check the other markets, now remember the Russell had further down to go to reach its ascending support, so we thought it might hit the low of these sort of candles down here, which it's done. But by and large, they've all sort of hit their ascending support. The Nasdaq was already below it, so it's the weakest of them all, I would say, which makes sense. It's been the strongest of them all for some years. And on the recent drop, it was also the weakest, along with the Russell. But it's these tech stocks that have been destroyed the most because they've benefited the most in the last few years. So another red day. It didn't close too far below yesterday's close, but another red day nonetheless. I'm just going to turn to the DAX, which I think is more significant for this period. So, thing is, because during the day it was up and down, again, Europe closed when everything looked okay. So it closed sort of up. But then as after it closed, the US markets went down. So I feel like tomorrow it will open down. And I think it will close pretty damn close to its lows down here, 12,600. Which is how much of a percentage move from its close today. Yeah, not even 2%. I think it could do it. And it's got every reason to. All the catalysts are there. Europe is really pretty screwed. I mean, you've got all these sort of bailouts of energy companies. All these governments are coming up with useless solutions to fundamental problems like, oh, inflation's a problem, we're gonna spend money, like print money or borrow money to give it to the people to make up for too much printing and borrowing. So it's just they can't face reality, and it's always short-term solutions that create more long-term damage. So, and I think the market gets it. So there's no uh golden way out of this situation. You have to swallow medicine, but they don't want to do it. Anyway, I feel like we're gonna close towards the lows, and the flush is still on. I still feel like the DAX will take out 12,400 maybe this week. But tomorrow I'm looking for a close at 12,600-ish. I haven't checked the calendar. There must be some news. Every week there's some 2 or 3 big news events, so maybe that will reverse things. But fundamentally, they're raising rates and they want to pop this bubble, and they don't want to normally, but inflation is too much of a real problem. Normally, they would probably lower interest rates or talk up the market, but there's this, inflation is the biggest problem, and the people know about it. So, so that's what I think. So the markets are down. I think the DAX will go down tomorrow, and that will lead continuation. I mean, I would normally expect a bounce here. I've thought about a bounce for the last 2 or 3 days because we've hit this circle for the last 3 trading days, but it hasn't materialized. And I think the DAX is going to keep any bounce subdued. So, I mean, the bounce that I expected came on this day here, which would have been yesterday, but straight away down, closed down. And you can see how relevant the close was because today we had another soft day, let's call it. So maybe the bounce is done. Everyone just sold into it straight away. So if there is a bit of a bounce from here across these markets, it'll be weak. sideways for a few days and down. But anyway, you know, why would you play this bounce? I think if you hold stock, sell into it. Sell into it, just as this was a massive sell here, and I sold into this. I just feel like any bounce from here is another sell. I mean, really, what do you expect? You think the market's going to go up, hold this ascending charts are the weakest chart patterns, by the way. You think it's going to hold this, climb to test 204, and then have a little cup and handle breakout? Really, it's just anything's possible, but charts are here to help you with probability, and statistically speaking, this is just so unlikely. So sell the rallies, and let's see what the DAX does. Now, DXY, the dollar index, closes again to a new high. We're above 110. We close above 110. The euro is a pathetic 99, and it was actually venturing in the 98s today. I mean, let's just look at the euro, which makes up the greatest part of the dollar index. We have to go to the weekly. That's how awful it is. Not much support. I mean, a little bit of support around here in the mid 90s, but then boom, straight to the below 90. We don't get there in one go, but we've basically lost $1 support, one-to-one parity. I won't look at the other ones yet. But yeah, DXY, very strong. I normally would never buy a parabolic chart like this, but I hold a lot of cash and I obviously hold dollars. So I get paid in euros, so I convert that into dollars too. It's a bit of a hedge, but I held a lot of dollars, so I'm very happy with it going up. And to watch stock prices go down in dollar denominated value. So I'm happy with the dollar going up. And if it goes down, well, I hold gold, which would love that. So, and gold related assets. So dollar up, and what goes up with the dollar are yields. So I've got the 2, the 10, and the 30. I found quite interesting the 2. Let's just zoom in on the daily here because the weekly is mad. You can see very strong. We took out the high. We had a little bit of a drop, cup and handle, and now we look like we're going to go for new highs. The 10-year took out this section here. So you can see a new high breakout here. I think we're going to venture towards the top. 3.5 is the target. And the 30-year closed at new highs. So the 30-year is looking very nice here. The 30-year is the most important out of all of them for me. So that's just more of a signal that the yields will keep rising. And if the yields go up, the dollar goes up, everything goes down. So let's look at gold and silver now. Gold had a good period during the day. We can see it screamed at 1720, went for 1730. So let's just zoom out a little bit, sorry. You know, it was hitting its old support. So we flushed this zone, went below 1700, hit 1680, 88, if you remember that day. And we ventured all the way up to 1726 before dropping lower, which is pretty bearish stuff, especially when you zoom out and see the daily candle. Silver, same sort of pattern, very nice and strong. I think at one point it was up 2% and then it closed ugly again. Let's just look at the daily. So look at that, pretty horrible stuff. If we look at the close of yesterday and the high of today, look at that, 2.5% at one point for silver, and then closes down almost 1%. Gold, similar looking candle. So yesterday's close wasn't as good, but still today was up 1% and then closes down 0.5%. And I mean, if you flip this chart upside down, it would look very bullish. And likewise, it looks pretty bearish. Let's see, I still think we'll have good support around here. And something else I realized is the miners, moving on to the miners, I felt outperformed the market to some degree, not massively, but during the day, they outperformed, I would say. But then as all the selling started, you know, everything gets thrown out together. So it's just the same lesson. I still feel like gold related assets want to go up, they want to outperform, and they do outperform. But ultimately, when mayhem strikes, everything gets sold and it's the same suspects that do well. It's the dollar, it's I was going to say bonds, but in this case it's yields, volatility, and just cash, just get out, So that's the lesson for gold related assets. Since we are talking about commodities, it's worth looking at oil, which I rarely do, but I do keep an eye on oil a lot. I don't cover it in my videos, but look at this descent into this ascending support. Now it's closed pretty weak at the lows here. And if we flush this sort of 86, let's call it, then I think we're going to start. And oil has a tendency to really move with a lot of momentum. So I can imagine a lot of stop losses triggered under 86 and then probably go to 82, 83. First pit stop. I think a lot of people are willing to buy oil. So although they'll have a lot of triggered selling, I think oil will be bought upon the dip, and you have a lot of fighting between the paper market and the physical market. And the Saudis are unhappy with the Americans using paper contracts to artificially suppress it, because obviously they want oil down to help inflation for the election, and they're releasing the strategic petroleum reserve, blah blah blah, lots of games. But I feel like oil will be bought if it's flushed here, so that could be a nice opportunity. Natural gas took a smash today, at least US natural gas. I just feel like that's an opportunity to buy. Now, I do own one oil gas related stock, which has done very well. I covered it once, I think. Trillium, where is it? There's the US ticker, the Canadian ticker. Look at that, it's just squeezing higher because of obviously the European crisis. So I think I'll end it there. I just wanted to cover the markets in general and commodities, in particular gold and silver for this video. Here I'll just go over my gold and silver stocks. You can see the seniors, not much action, just sort of sideways movement, nothing to speak of. Yamana, new entry, was a little weak, but I bought it already off this ascending support, so it's kind of back to buy-in zone. Wheaton, Pan America, nothing crazy. Goldfields, a new, something I added recently. I actually added it around here, 8:30 or something. I was too impatient. In the end, it went where I wanted it. I wanted to buy at 801. Now it's actually below. And obviously this will keep going down with the miners if that momentum continues. My aggressive silver ones, silver stocks, they did not go much lower. They should have been lower, so that's a good sign. These I just want to accumulate and buy more and more over the next couple of weeks, months. So this type of a percentage move is not attractive enough to buy since I've already bought around these prices. And the rest, I mean, these aren't even down 7%. This didn't even trade today. This is a bit of a deceptive price action here. Basically flat. You go from Rainer Silver all the way up to Newmont. These are my gold silver stocks. Basically no movement. The alternative stocks, I'll cover that. They were a bit crazier. I've got very weak holdings here. Mind Medicine had, I think, a reverse split today, so that got destroyed, but I'm fine with that. Hive, I sold most of it. That's a crypto-related stock. I'll go over that in a different video. So I just want to keep it strictly to commodities and general markets. And just to recap, markets didn't close down too much. Nothing went down too much except natural gas. But still the same continuation, lower. And again, I'm still looking for that big flush day, which I think will be led by the DAX possibly, or at least Europe. And I think there are some Lehman style events coming in Europe, and then we may have already seen that with these energy companies being bailed out. I think Sweden, some Scandinavian countries, Germany started to do a 60 something billion euro bailout. It's all coming undone, and we're nowhere near winter yet, so no reason to turn bullish despite the drop in these markets to what I thought would be a nice support zone. I don't think it'll be that supportive, so I'll cover some other sectors in my other videos, but that'll do for the general markets and commodities for now. Good luck.